Good evening, everyone. Welcome to our weekly market overview here. Just a quick overview of the market to kind of prepare you for the week coming. Anything you see in this video is not financial advice, just merely for educational purposes. All right. So first thing that we're gonna look at, as usual, is our SPY weekly candle. So can't really say too much about it because it's just a long red nasty candle, right? What we can note about the candle is a few things here. So one thing we can note is it did create a lower high, as well as it broke through our range here at our previous swing low, and it seems to bounce just a little bit off of our 200 SMA. This is our 200 daily SMA. Um, I have the where the indicator is. It is showing the daily no matter what time frame. So this isn't the weekly. I believe the weekly is a little bit lower. The weekly is somewhere right here. Like we haven't touched the weekly SMA. Um, but our daily SMA is really what we want to be looking at. And then let's look at. Oh my God, I forget how many drawings I have. I don't know if you guys can see it here, but wish I can show you it without having all these lines here. So let's say it's around 561 ish. All right, so what I drew here is from our push up, right? So we had our weekly trend since the beginning of August after this gap down. We've had our slow pushes up, creating higher lows, higher lows. Even here was technically a higher low. Um, we're now creating lower lows, and actually, the 50% retracement on this whole move from here to here, the 50% is around 562, 61, 562 area, right around there. So we're not too far off from the failure of the weekly trend here from August. But we did also break our weekly trend here. Let's do a different color so it's easier, blue. All right, so we did break our weekly trend here, which is right here, yeah, November. And this is our election gap up, right? So we had this pull back for a little bit, and then during the elections, November 4th, we had this huge run up. And since then, when we had our pullback, we never really broke below that. We did eventually close the gap, but we never really did the whole 100% retracement of that initial push up. And you'll see this week we actually did do that. So we finally cleared the range that we were in for the initial gap up since the election. And that's why I mentioned here that we create this lower low that we created here was out of our previous push up range. So that for me leans a little bit more bearish than bullish, at especially since last week we were just looking to see how much we can pull back this week. And anything under, once we start breaking underneath this 200 moving average, is when we'll really start to see some corrections in the market. And what do I mean by that? Let's look at our our COVID push up, right? So we had price action above our 200 for quite some time. Once we started to break below it, what happened here? We started to have the 200 act as heavy resistance, right? All of our EMAs, of course, the shorter SMAs, shorter SMAs, as in the 50, which is the blue, the green is the 20, and the 5 is the yellow. Those start to group up because obviously it's less days. So your 5-day moving average, your 20-day, it's eventually going to catch up to price quite a bit. But really what you want to look at is the point when we start breaking over our 200. So this isn't major financial advice, but this is something that you can look at. So basically, if you ever heard the term where someone's saying they're selling puts or they're selling calls, and this is usually when people, this is the point when someone starts to sell puts, and it basically is just price action under the 200. So if we start to break confirm below the 200 and still have some price action below, um, a good option if you're, I'm not super familiar with selling puts because I don't usually, but you can sell puts underneath the 200 because it will act as resistance for several months before we actually start to have another bull run above it. So I'm curious to see if we start breaking below here, because if you look at price action here, you look at price action here, it seems fairly similar, right? We go into these phases every 1 to 2 years. So we're at that breaking point right now. That doesn't necessarily mean short the market all the way down, but we're in this, I would say, pivot where now we're starting to see price action starting to go underneath that 200 simple moving average, which is just your basic average of the last 200 days. So we're starting to see price action underneath it, which is definitely leaning more bearish than bullish. So we really just want to be looking at our supports. The most amazing thing about price action that's pulling back, is we have history, right? And what do I mean by history? Is we have all of this price action here, right? We have all of these levels, we have all of these resistances, supports, breaks, all of these things, swing highs, swing lows. We have all these information. Yes, every day you should play it slightly different, because the market won't react to the same levels every day the same way, right? But it is good to use as a reference, right? As opposed to pushing up and creating new highs. That's when the fear kicks in, right? Because you're like, I don't know how much this can push, right? It can push indefinitely and it can go down indefinitely, but at least on the way down, you know where some stops will be along the journey down, right? So that's, I guess, one good way to look at it. And then, oh yes, so I don't really have, I have the, it's on the daily, you'll see it better. So let's go to the daily. Okay. So on the daily here, now we can see that support at the 200 that I mentioned before. And currently our next line of resistance that we're looking to see is just the 5, this yellow, the 5 SMA. This is going to be your major resistance coming up, right? Doesn't matter any other levels in between, right? So you can have a slight resistance at 580 or whatever the case is. This is going to be your major pivot right here. It's going to move. So if I tell you this level here, it's going to be different tomorrow. But the 5 simple moving average is going to be your major resistance here to see if we can try to capture a small push upwards, right? Whether it's a little bit of a recovery or do we have this continuous selling that's taking place. One thing I wanted to mention as well is last week we were looking to see our 20, which is our green here, and our blue, which is our 50. We were looking last week to see if we can have a push up and reject off of it. On the daily here, it looks as if we did. If I go on to the smaller time frames, you'll see there's like a little bit of a gap. So we didn't necessarily completely touch it, but this is essentially what we were looking at last week, right? We were looking to see if price action could reject that 50 SMA and have some price action where our 20 SMA starts to push underneath our 50. We're getting to that point, right? So this is one thing we were looking at last week for a stronger confirmation of selling pressure, right? So obviously it's selling, it's going down, right? But where do you feel more comfortable shorting? I would feel more comfortable when this starts to break underneath. And that's why it leads me to this, where the sentiment I have where it's not necessarily going to be bullish, but I do see some price action pushing upwards. Let's go to, let's take off put on our drawings here. Okay, so let me draw on this to make it easier. What's a bright color? Let's do yellow. No yellow, there's too many yellows. Blue, I guess I'm gonna have to go with. Okay, so blue, we have our selling channel here that's been building out that we were looking at last week. I just created this line here as it just started to take place. So we're still holding in this channel here. What I'm looking at for a higher push up, where I say there's could be a little bit of a bounce push up here, is I want to see us have that bear flag build out pretty much. So a bear flag build out similar to that. May not be clean as I would like it to be, but let's draw out pathing wise. What do I mean by that? So let's do it like green for our bear flag, right? So what I'm looking at is to see two things play out. Either we have some price action where we start breaking above. Let's just make it clean lines. Let's just make it clean lines. So of course there's going to be a little bit of chop in between, or price action where it's just a little bit of a push and pull and along the way. So just bear that in mind. I'm just going to draw it out at least so it looks more cleaner for you guys to see it. So a push up here where we have a test of our selling channel here. A push up here, starting to close and supporting off of our 5, I believe that's 581, 580, 70, I believe. I'll post all the levels at the end. But yeah, so a bounce around here to create that little head here for a break below, for a little bit of a head and shoulders. So let's draw that a little bit more cleaner because that doesn't look as well. So we're looking to see some price action because we can have push up until around 590 before it starts to invalidate the bear flag, right? That's why I have it drawn this way. So right around here is going to be your invalidation of the bear flag. So we have quite a bit to push up to still remain bullish. That's kind of the point that I'm getting at here, is we have a little bit of a push still left to remain bullish, right? Remain bearish. So if we start breaking over our selling channel, it would seem a little bit more bullish, where you can actually maybe ride the trend up a little bit. But what I'm looking at is to create a head and shoulders here, where we're going to create the head and shoulders pattern like this before having that flush, and then getting us back in to our channel here for continued downside. So that's one thing I'm looking at for even if we have any upside. For any downside, let's go down to the 1 hour. It looks better on the 1 hour. All right, so for any bearish pressure, what I'm looking at is this. So let's draw, keep it yellow, right? So we're focusing on these lines here. This is our strong selling pressure that's taking place. So we could have continued push down into this selling pressure here, and looking for breaks of our support down. One thing I'm going to be looking for is just to test just watching our levels, right? So it sounds silly, but literally on a downtrend, you're just watching your levels on the way down. So what I would be looking for is some type of price action remaining in this channel. And once we break out of our controlled selling here that I have in, these are the blue channels that I drew just a second ago. Once we start having a break underneath here, and we start closing under our pivotal point here at 561, that's when I will feel more comfortable with stronger downside at that 561 level, 561.80, So we could just have controlled selling continue pushing down. It may not happen this week. We might have continued pushes down. Maybe we have a break up here, a rejection, and this continues to fall down, right? Create maybe another head and shoulders pattern. That's not the cleanest looking one. Um, but I just want to see us maintain that selling pressure on the way down, even if we create another channel of selling pressure like this and we continue to push down. The bigger short is underneath the 561. That's what I'm going to be looking for. It may not happen this week. It might take a little bit, but we do have a lot of inflation data coming out this week. So that's why I'm a little bit more hesitant to give short-term pathing and more of like a long-term overlook of pathing. Once again, we're just going to be looking to see the rejection at our 5 SMA and our 200 SMA, which is here and here. One thing before I push off here. Where did I get the 561? It's this level right here. This was our 50% pushback off of the weekly trend that I was showing you guys earlier at the beginning of the live, where we have this initial push up since the gap down. This is the CrowdStrike gap down. We had to push up. We broke down out of our election gap up. We're out of that range now. So now this is our last weekly trend that's playing out here. And it kind of corresponds with our 200 SMA catching up, right? So the last line in the sand to start having price action shoot lower is going to be this area here, right? So our 50% is around 561.80, right? So which is, let's say it's like right around here. That could have corresponds with our previous swing high rejection and breakout. So really a failure here at that 50 is what I'm going to be looking for. That's going to be our major thing in the market, right? We have multiple touches around this area. So if we start pulling back and then breaking underneath this level, then that's where I feel feel more comfortable with us having a short feel more comfortable shorting, right? Because we have thin structure down here, thin structure down here. Our candles have been just massive candles, right? So it's allowing us to have these price movements where they're going in one direction pretty quickly. So that's one thing I'm looking at. Of course, this is the weekly, so it's not going to drop down all the way like super fast, right? Maybe we stop around 540, even 550, just because it's the weekly trend. But do want to be looking out for 561.80. That's going to be your confirmation of a weekly trend failure. We're almost there. We're like very, very close there. But like I said, I do see us having a little bit of a supportive bounce coming into this week beforehand. And then let's just quickly kind of go over what we mentioned last week. So last week we were talking about, let's do red. All right, so last week, of course, I have a bullish and a bearish pattern playing out. In this case, our bear pattern did play out. We were looking for that 50 SMA rejection that I mentioned earlier in the live as well. We didn't get that. This is where I was talking about how it's just like slightly off on the weekly and the daily. It looks like we did reject off of it, but we did not have that rejection. But last week, what I mentioned was I wanted to see us reject one off of the 50 on any strong pushes up. So we did have a little bit of a strong push up at the open before we had the flush. And then I was looking to see us reject around this lower bounds range, right? I did draw these out similarly. And I mentioned that we had this thin structure here, right? Where price has been moving, it's moving smoothly down and up between it, right? So price is going to move in one direction in this range until we create that chop. Similarly here, what's another area like here where we have these little chops? That's the importance of chop, is having an area where price can kind of slow down a little bit, right? In this case, we have price moving up and down fluidly between this area. So I was looking to see if we have the rejection at the 50 and then continuous rejections out of this range, right? Our chop right here. And I roughly draw a line right in the middle of it, and that's where we have the bottom bounds of our box here. And I didn't mention, if we start breaking above, I feel more comfortable going long, and I would look for some rejections within this box for shorts. So that's kind of what we had here happen, right? So we had that push up, pull down, and then bounce around the 580s that I mentioned. But we didn't get a full complete bounce. We actually pushed even further down before we rejected at the 584. That was another area that I mentioned last week where we would see the 5-day moving average catching up, and we would look for the rejection. So it didn't necessarily happen here, but it did happen here. Towards the end of the week, we did have the rejection. This is Wednesday at close, and then we had the push down for the Thursday gap open, right? But that's just kind of the pathing that we were drawing out last week, and it kind of played out the similar way. Let's draw it in red, right? So this is what we were looking for: a rejection here, push down, reject around there, and then push down. But it took a whole day before it actually did the rejection at the 5 that we were looking for, which is just better because we do have stronger confirmations where we're waiting for the multiple rejections at an area. You feel a little bit more comfortable with the short at that point, right? All right, so let's move on to our QQQ. Again, we start with our weekly. Let me scroll down on my notes here. Okay, so the weekly level here. Similar with SPY, we have that bounce over the 200, right? But we did have, unlike SPY, we had a much deeper push out of the 200, right? And we'll see that when we move on to the lower time frames, where we'll start to see that rejection around the 200 happening, which is kind of something that I was pointing out this week in the channel, and I believe a few channels that mentioned it, where the 200 simple moving average is something that we were really looking to see if we reject. That's going to be our major thing, right? Once again, similar, public service announcement that I made on SPY, similar situation, right? We're looking for that starting to have the break underneath our 200 for that correction area, right? We have this correction zone. Even if we go back further, right, we have correction zones. I don't want to go back too further into like the like 2008, right? We have that breakdown and correction zone. But I'm focusing more on this area because we do have a tech heavy market, and we do have these large volatile candles that we didn't have in the past, right? Look at these little small tiny little candles as opposed to these huge body candles that are moving pretty much following COVID, right? So we're looking for that correction area where we're breaking down and starting to reject at the 200 area, and we slowly started to see that just a little bit on QQQ this week. So I'm curious to see if it would hold up here. Let's pull up our levels here. I have a bunch of levels. Once again, if you didn't know this about me, I know a lot of people, whoever messaged me, they'll get the little bit of the insight on it, but I generally don't look at these levels as support or resistances. I mean, they're good guidance because obviously if price is below that level, you would think it's a support. So that's kind of how I would picture it. I normally change these colors just to make it easier for you guys, but I just wanted to stress that point where I'm looking at levels where they're an area of significance as opposed to an area to short or sell, or whatever the case is, right, for entries and exits. I just look to see where these levels have react, like the price has some type of reaction to it, right? If it resisted it and then turned it into support, that's a good reaction, right? It could be both a support and a resistance at the same time. That's how all our levels work. So I kind of just look at it as an area of significance. So I just wanted to point that out. That's why I have so many, right? Your major like supports and resistances are going to be a little bit more spread out, especially on the weekly as we're looking at it. But one thing I wanted to notice here is we were looking to see, we had this push down last week, and we were looking to see here, student blue to keep that purple. Our purple is going to be, blue is our controlled selling, right? That's our purple here is. Control selling meaning is when we have a huge push up, we do have that little pullback before we start pushing up, right? That is your controlled selling. You could, in a bear flag, you can look at it as like a bull flag, a bear flag, right? But in reality, it's really what the trend is. So instead of, yes, it looks like a bull flag here, but that's not necessarily what I'm looking at. I'm looking to more towards the trend and see if a trend is holding, as opposed to just looking for a bull flag. But anyways, we were looking here on a controlled selling pullback here for some time, right? And last week we mentioned that we did have a push below it, but we did close back inside of it, right? This week we're starting to close outside of it. And with that happening, one thing I noticed that took place now since that occurred is now we have this strong selling channel that's building out. Very strong selling pressure. And where does that kind of confidence to say that this is huge selling pressure comes from? This level right here, right? So remember how I mentioned on SPY, we still got a little bit before we break underneath our weekly trend failure. SPY QQQ's weekly trend failure was the 505 here, right? Been stressing about this for, I would say, I don't know, for the last several weeks now. I've been mentioning it. We finally kind of got there where we're starting to break underneath our 50 here, our 50% move on the push up. So that leans a little bit more bearish to me. That's hence why I have this selling pressure here that is building up, especially since we started to close underneath our 50 here. And our last line of defense was the 200, and we did have that push underneath before then. One thing I do want to also note is 590, 597, 590, yeah, right here, around here. So let's get rid of these levels. One thing I'm looking for is a retest around 597. It's like right around there. It's not exact. Let's say it's like right around there, 597. This was our push up, reject, and then breakout for that upside trend that we had for the longest. So with us flushing underneath the 20 SMA is really where I'm looking on more of a bearish side, and especially if we're holding underneath the 505. I know it's above it, but we're looking at 505. We were breaking underneath that for the weekly trend failure. What I want to see here is if we can reject once again at this area. So if we do have a little bit of a push up towards the 497 area and then flush, I would feel more comfortable with price action that looks like that, with our 200 coming around here, leading for more failures to support off of it. That would be good. Again, this is a weekly structure, so it's not going to take place this week or next week, or it'll take some time. But that's just something that I was noting. I wanted to see if we really do start rejecting off that 497 area here on the weekly. Okay, and then like I said, we're underneath. Let's look at the daily here. Our daily here gives us that clearer confirmation that I was telling you about, where we were having the rejection underneath our 200. So we had that push down, and then even on our push up on Friday, when we started to push up towards like a sort of a relief bounce, we were wondering if we were going to have that huge recovery. We did have the rejection right off of the 200 simple moving average, which led to us having further downside. So that's one thing that I'll be looking out for, to see if we have that continued rejection. Even if we do have a little bit of a look above here, notice how we're rejecting off the 5-day simple moving averages. So for the last 5 days, we continue to have a downtrend that is holding. And then now our weekly trend, this is our last line in the sand, which is our 200 SMA. So I want to see if we start having some rejections around there to feel more comfortable with the shorting, especially with tech. And we'll lead back in a little bit to the financial side, because then that was something that we were mentioning last week, how we have the strong failures on tech, but financials is holding up. So um, bear with me, and we'll get through that in a bit. So yes, so we're just looking to see if we reject around the 5 SMA. So let's go to a little bit of a pathing here. Actually, before then, wanted to mention here where we stopped our 200 and that rejection area here. Oh, we did mention on the weekly, yeah. So it was around this swing high and then reject before we pushed up. So that's what this week pivotal point is. I'm also going to give that. That's pretty much in my messages where I'll say bullish or bearish underneath. So it would be bearish underneath this week pivotal point. So I'll give you that level. Let's move on to the pathing here. So for pathing, let's draw it out here. So for pathing last week, let's talk about last week before we go into anything else. We were looking at last week. Let's see, where is our Friday? So our Monday was right here. Last week, we were looking to see if we have a push up to clear our 505 level, right? So we had to push underneath our 505 on near our 505 here, and we were looking to see if we reject the 5 SMA. That was the major thing I mentioned last week, just to see if we can reject off of the 5 SMA. And we did have that rejection off of the 5 SMA, and then once we broke down, right, we had the rejection off of the 5 SMA, and then of course there was a bullish pathing, but we're just going to go through the bearish pathing because this was the one obviously that panned out this week. So we did have the rejection off our 5 here, and then once we started to fail at the 505, like I mentioned, we're going to have stronger selling pressure here, and our last support here was going to be the 200. So this is where I said that we can expect a bounce here, and we want to see us reject around the 5 SMA one more time. Again, similarly to SPY, we have a day here where our pathing kind of looked a little weird, but the same thing played out. We just had a double rejection at the 5 SMA before we started to flush, and then reject off of the 200. And now we want to see continued rejection off that 200 for further downside. So be on the lookout for continued rejection here. As far as pathing here, I don't really have too much to say. I do want to see for bearish, I want to see continued rejection off of the 200 SMA. For bullish, this may not be the prettiest pattern here, but what I do see playing out we can have here is sort of we'll have an inverse head and shoulders playing out here. So I want to see us push up around here, have a little bit of a consolidation near our 200, right? It's going to have a little bit of struggle, one around here, and then two, it's going to be sitting between our 2 SMAs again. That's where we're going to get that little bit of chop and consolidation that I was talking about. And similar with SPY, we're looking for that bear flag here to play out. So it kind of lends a hand in that, right? So even if we do have some pushes up further, right, so we can have a little bit of a chop around here, or we can even have a stronger push and reject off of the 5 here, and then we'll have a smaller, we can reject off of the 5 here, but I'm looking to see if we have smaller inverse head and shoulders to play out before rejecting at that 505 level and then flushing down. So even our bullish pattern here does still have bearish sentiment to it. So I'm looking to see if we do have some strength here building up, or we can recapture this 5 simple moving average right around here. Recapture is going to give us some strength in the market. That's where we're going to have our bulls step in, our retailers step in to say, hey, trends is starting to look good. But that's where the huge fake out is going to happen, right? We're going to have this push up around the 505. We're going to have that. We should, at least I'm not going to be say that I'm the perfect person here, but I would surely see a rejection around this area here, and then feel more comfortable with shorting on the way down, even in any upside. So once again,
रखिए ना इस्तेमाल करने का
let me go ahead and mute you, my friend. Sorry about that. All right. So once again, let's just go through the pattern one more time here, so it looks a little bit more cleaner. So we do have our head, our shoulder with our neckline being this weak pivotal point here at 549.81, and we'll have a push up here. We can even push up a little bit higher, but we're looking mainly for a push here, consolidate to break up, right, to create that other and to create our inverse head and shoulders here and give us that upside rejection at the 505, which also corresponds with us continuing to have that bear flag consolidation playing out. Um, so let's see if that's the case this week. And then for the bearish pathing, like I said, I'm just looking for continued rejections under the 200. Simple. Looking to see one, a rejection under there or any price action underneath it. Currently we're like somewhere near Friday's open. I'm not sure if futures are still pushing down, but we were near the Friday's open when I last checked. So if we do have continued rejection, I would just look for our levels here to indicate a good like exit point on the way down. And then for our IWM here, IWM is our, let's look at our weekly here because it has been just, IWM has been having a beating this whole time, right? So we had this huge weekly pushback here from last year towards the ending of last year into December. We had that recovery bounce around here, and then we're starting to break down now. Last week we were looking at us starting to touch that 200 SMA and starting to reject under there. And then we wanted to see if we would support off of our 5 to have a little bit of a push up again, and that's kind of what happened this week, right? So we had that push down, bounced off of the 5, gave us a little bit of strength. I know it's in the weekly, so it's not easy to see. We'll go back into the daily and start to look at it, but we're once again underneath that 200. So that's one thing I'm just going to keep stressing. I know you guys hear me, I don't usually do moving averages too often, but this is one thing that is quite important in the market, is that 200 daily simple moving average, and you don't really want to be using it intraday. That's usually for the EMA. It's based on the momentum of the stock market, but our SMA is going to be the average, simply the average of our price over the last 200 days. And we go through these phases where we start breaking, we're bullish above it, and then we're bearish underneath it, where we start rejecting underneath it. With IWM here, we're on this interesting part section in the weekly. I don't want to draw to, it'll bring up all these lines. All right, one thing I just wanted to notice here is our 200 level here. With IWM, psych levels are everything. It is one of the major things. It didn't do it this time. Actually, we were 2 cents shy, but it tends to usually end on a whole number. Like you'll literally see the market close at 225. Like it will close at a perfect whole number usually. It's just an interesting fact there, but we wanted to see here, right? We do have a little bit of a resistance that happened here, right? We had a break above here, started to support before we had that push up here. So now this is going to be our last line of defense on IWM. And the reason that I say not failure here is because what happens when an area has multiple rejections here, right? And then we finally have, look, we have a look above and failure, still the same case, look above, fail, still same case. So that's 1, 2, 3, 4, 5, 6 times we had this rejection near the 200 before we started to break above. For me, in my honest opinion, I think it would be slightly difficult to just flush underneath here. There's so much volume that has built up in this range to maintain price action up in this upper bounds of the area, right? We did break underneath, so we had we had 2 ranges that we were in, right? Our upper range and then our lower range here. and we're now starting to break underneath. That's something I mentioned last week. But one thing I just wanted to point out is we're at this area where we have strong support at the 200. So, um, do I think that we can't just continue to flush? No, but I do think it's not going to be an easy flush. It's going to definitely take, I would probably say, a week, 2 weeks, three. It's going to take some time for this to play out before it does that flush. It's not going to happen right away, unless we have some type of news, right? News always throws any analysis that we have out of the window. So let's look at our week. Ooh, didn't realize I was drawing something here. All right, so on our weekly, we do have that strong selling pressure that's been building out little by little. On our relief bounds here, we still have continued selling pressure. So I just want to see if we create that another similarly a bear flag, right? That's all I'm looking at. This is just a huge flag playing out. So I want to see if we have a little bit of, even if we have a little bit of a push up, consolidate in this range, and then we'll start to look to see if we can actually fail that 200, right? And like I said, I don't think it's going to happen right away. I think it's going to be something that looks a little bit like this before we have a breakdown. I know that looks crazy, but if you look right here, this is several weeks in the same area, several weeks in the same area. So it's not out of the woods to say that IWM is going to be hovering between two pivotal points, right? Here in this case, we had two major pivotal points right here, and it just kind of hovered here. It did it again, and now we want to see it start to do the same thing where we're building a little bit of volume here to see if we can build up some liquidity to have that further push down, right? So let's look at our daily here. One thing I wanted to know, oh, our daily, yeah, I don't need the fib. So our daily here, like I said, we're rejecting at the 200 SMA once again, and we're starting to push price below underneath that. For IWM, we're just looking to see if we have any pushes up slightly. Last week we were looking to see if we had that rejection near the two. We were looking to see if we had rejection around 275 here last week. So it was what Friday was here. It was lower down here. And let's go to that one. Let's go to the 1 hour so it looks a little cleaner for you guys. All right. So 1 hour here on Friday, which was right around here. We were looking to see, oh, right around here. Sorry. We were looking to see if we'll have that rejection, one at the 200 SMA, and then two at our level here at 215.75. We were mentioning that last week. We just want to see if we have some price action where that pushes up, and then we just keep looking for our support failures, right? With IWM, once again, the last few weeks I've been saying the same thing. We're just looking at our supports along the way to see if it starts to fail on the way down. But last week we were looking to see if we have any pushes up to reject off of our 200 and as well as our 275 level. And we did have that rejection last week and just shorted on the way down, right? So that's something we were looking at to see if our failures could take place. And let's look at our daily our 1 hour. Let's look at our levels real quick. All right, so as far as pathing, nothing too major here that I'm looking at. Once again, I just want to start seeing I want to see us build that liquidity in this range. So we're already here building up, right? On the weekly, what did I draw out, right? A little bit of a chop in this range, right? So we're already kind of there, right? We're already in this area where we're creating a little bit of liquidity here. So I do want to see us continue to reject off of the 5, and just look for any opportunities if we start seeing us break under the 202 level. 202.22 I believe is my pivot here, and 209s are highs. So I would just look towards either just following the momentum, either on the upside, just no major pathing here that I can think of. As far as how price action is going to move, I mean, there is a slight pattern here that we can look. It's very minuscule. If we do have any pushes up here to test our 215 level once again and then start to break down, right? We chop again in this range that I mentioned here, and then have that flush, we're gonna have a slight head and shoulder pattern. It's not the neatest one. So if we do have that push up, which, as we were looking at on SPY and QQQ, we do see that there's a chance that we can have a little bit of a push up to reject on our upper bounds, or create that flag in our bear flag. So it's not out of the woods to say that IWM might have that push up to reject again at that 215, allowing us to get that head and shoulders pattern to play out. And like I said, we're not gonna have that. We may not have that flush right off the bat, right? We might have a little bit of a look below, but our 200 flush it's not gonna be an easy battle. It's gonna be a little bit of a chop. So I would just look at our levels on the way up here, look to see us reject at 209, look to see us support at 202, and just play that range, right? Just take your contracts up, take your contracts down, take your contracts up. Simple as that. Until we start breaking underneath. Our major move is going to be the break underneath 200. So I'm waiting to see if that takes place. All right, quickly here, I'm just going to go through the sectors. I don't want to take up too much time. Let's do our financial sector. Let's go to the daily here. So on the financial sector, last few weeks now, we've been mentioning that the financial sector kind of has been holding up the market, right? The financial sector is the other 30% of SPY. So 30% is going to be our tech. The other 30% is going to be our financial sector. So for the last few weeks now, we've had some nasty pushes down on the tech side of the market, but our financial sector has been pushing up, right? So we were looking to see. I did have a slight trend. They're pink because they're smaller. I guess you can say consolidation or smaller bearish, smaller bullish channels here. So a strong bullish channel would be obviously something like this with this orange here, where we're having huge pushes up, right? Bullish consolidation kind of looks like this, right? And that's really what's happening here, where we're pushing up, but not with some immediate strength. But we were pushing up with strength, right? And the reason I say that we do have a little bit of strength is because we're on all-time highs, right? So last week we were talking about we were in all-time highs, and I wanted to see us have a push down, because it's gonna have a slight rejection here, and I wanted to see if we hold over the 52, or two, hold over our 50.48, which is going to be our major support here in this range. Right, we have a slight bear flag playing out here, right? Bull flag playing out here. So we wanted to see us hold over the 50 here. So you noticed here on Wednesday, we did have that push underneath that 50 SMA, and as well as our flush underneath. So this is our Tuesday push. On SPY, we had that huge strong pushes down. On Wednesday, we opened up and started rejecting at the 50 SMA. This is an area where I said this was the second line in the sand. If we do have a flush below our 50 here, if we don't bounce at least off the 50, we're going to look for more downside. And that was our confirmation to see if there was more downside on SPY as well, right? We can have a mixed bag of sectors, right? If tech is down and financials is up, it's going to cause that push and pull in the market. So we're waiting to see if we have that giveaway, and that's kind of what happened here. So we see on Wednesday we did have that flush underneath here, and on SPY we had a huge pullback, not too bad, but we did have the rejection at the 50 here. And then on Thursday, after us having that rejection and pull back off of the 50, we actually gap below on SPY, and as well as the financial sector had that gap below. So once we started losing that 50, we did start to have less confidence in the financial sector here. So that's something to worth note. And then we obviously had the break out of our channel here, but that's not something I was majorly looking at, because I did mention that we would have a little bit of a pullback near this area, but did not anticipate us to flush right below and then reject off of the 50. So that's a little bit out of my expertise there, but I have been looking to see if we have that failure on the financial sector as well as the tech to have more confidence in that short. And then that's kind of what happened this week. We had this huge push down, right? You're seeing SPY bleed like no other. So that this was holding us back for the long time for a long time now, right? We're looking at our tech sector go down and our financials still hold up. Now we have financials failing. So now I want to see if we do have any pushes up and reject our 50 again. And then we did fill this gap up, right? So let's see what happens this week, because we have a lot of inflation news this week. It's going to affect our financial sector here. So we filled this gap up that happened. So now do we start breaking above our 50 and continue with our financials holding up the market? Or do we have that rejection? Or do we have this little small push up and then reject down after the news? Let's see what happens this week. I do want to see us start to fail after, especially here. Once we get to the 48, let's do 48.25 area right at the gap up. Starting to fail under here, then I feel more comfortable with us having more of a bear market taking place here. Then let's look at our tech sector here. XLK. So we did notice for the longest time here, we had this channel building out our selling pressure. So our tech has been on a continuous selling pressure for the longest, right? As opposed to our financial sector, which had that push up. So this week we were looking to see if we had the break underneath, and we were looking to see if we can start testing that 200 SMA. So last week I was mentioning that I wanted to see if we start rejecting at the 200 SMA. So we did have that break below, reject around the 200 SMA. So this week what I'm looking at is to see if we have any pushes up. One, to either reject off of the 200 once again, or create that bear flag here and flush underneath once we start breaking under 220.25. So that's going to be important here, right? I would be looking out for that level to start seeing if we have some price action positively over it, or as well as any price action negative at that area, right? So we're looking, this is going to be our major pivot this week. I want to start seeing if we do have that breakup where it's going to give us that confidence that we were mentioning earlier, with that small bear, with the bear flag playing up and having that small push up. So let's see if that's the case, especially with our QQQ here. It's going to need that push up to kind of spy that guidance upwards. So let's see if that takes place here. So that's one thing I'm going to be looking at to see if we start pushing up here, and then once again rejecting at the 200 SMA. You're going to notice I'm going to bring this up for the next few lives. And if you rewatch this live and you look at the beginning, you'll know why I mentioned that. But we'll continue to mention it until it no longer becomes significance. At this point, it's still very significant. So we do want to see if we'll have that push up to create that bear flag for further flushes on the downside. And our lower targets are right here, right? We have lower liquidity here where price flushed down, then had strong pushes up. So let's see if that's still the case here. This was beginning of September. This was the announcement of the rate cuts. So tech loves rate cuts. So that's kind of what we had, that flush down push up. So now let's look at our next thing on the list, which is our XLY. So here's something interesting about the XLY. So last week I was mentioning that I want to see us have, this is our Friday, right? So this is where we were on Friday. So I wanted to see us start to test this support here and have a rejection near our break down, test the 516 level, fail, and reject at the 216 level, right? So we did have that take place, right, where we had the push down. I had a little bit of a look above around the 216, but we ultimately rejected off of it. And why do I mention that? I mentioned that if we had that rejection at the 216 level, we would see strong downside on Amazon and Tesla. Should I pull up the chart for you guys to see that huge downtrend, right? We're just flushing here. This is when it took place, Tuesday. Where's Tuesday? Right here. Continued downside, Amazon. Continued downside. So that's what we wanted to see on our XLY here. We wanted to see if we start to reject at that 216. That's around where we had that break below, support above, and started to have this bull trend that we had for a while. We broke down, retested this area around the 218 level. Now we're starting to fail. We failed, rejected last week. Now I wanted to see us start to fill this 216 level, and that's kind of what happened this week. We had that rejection, and that was our stronger confirmation that we had Tesla and Amazon having that stronger push down to feel more comfortable saying that the trend is holding, that we're going to continue for testing newer lows, and especially when we started hunting for that 200 SMA, and that's kind of what took place. So it was um, very nice to see play out. Simple as that. Um, as far as our pathing here, I just want to see, right, we're at the 200. I want to see us have this little bit of a bounce, start rejecting around the 5 again, and then flushing underneath. This is going to be our big line in the sand, the 200. 200 is highly important here, right? It's a very big level. I drew it in big numbers. It's going to be a big psych level. Right, this was our previous break above and failure around there, but our 200 is going to be the major thing here, 200 level. So not only is it the flush underneath our 200 SMA, but it's our 200 level here. I want to start seeing us flush underneath here, and then I'll feel more comfortable with you know, Tesla having that huge flush back down, and as well as Amazon. And what does that mean? It just means that people are more scarce to spend their money. So let's see if that's the case, right? With Powell saying that the inflation is doing well, um, that's gonna inflation is doing well, and they're not gonna do any rate cuts. Now you have sectors like this where people are not spending as much. People aren't so quick to put their money into the not only the market but into, you know, the economy in general, right? That's why this Friday we're going to see a lot of news on our consumer sentiment. So let's see if that's the case on Friday. If we have to have a little bit of a flush on Friday, we may or may not see that flush under the 200, and then we'll see that SPY and Tesla test those new lows. So let's see if that's the case. Not trying to be overly bearish right off the bat. And for our next sector is our XLP. Our XLP is a consumer staples. I believe Moen has an option idea for one of them here. I think it's Coca-Cola or Procter and Gamble. I can't remember which one. He does have one of the consumer staples in here coming out this week. So it's I would take a look at his levels there for the option ideas. But basically what we have here is our consumer staples pushing up. So last week we were looking at our TLT starting to make upwards momentum here. We started to see the rejection at the 200, but we're not too worrisome, right? I want to see us continue to hold over the 90. This is what I was mentioning last week. We started to strong push over the 90. So now we had this rejection, which is fine, but we're looking now to see if we hold over the 200. We feel that little that gap here. We're looking to hold over the 90. I'm sorry. And our 20. So I want to see us continue to have that strong push up. So with our TLT, which is our treasury bonds, having continuous strong momentums up, and then we have our XLP also having strong momentum up, that tells me that the market is starting to have I would say there's more inconsistencies or doubts in the market, right? Especially when I'm telling you, hey, financials is up, but then tech is down, right? And you're like, what is that? Like, it's just such this huge push and pull, right? And with that taking place, people feel more comfortable putting their money in safer assets, right? So high yield treasury bonds that are that are, you know, building interest over a long period of time. Similarly, with our consumer staples like Coca-Cola, Walmart, Procter and Gamble, Pepsi, Coca-Cola, Colgate, those brands, they're always going to be around. They're always going to be important. They're always going to be necessary for pretty much daily living, right? People use it, any of those products on the daily. So when the market starts to have these huge pullbacks, there's uncertainty. Even when we're in a bear market, you could say, we're not there yet, but even when we're on a bear market, these XLP are consumer staples. They are always there. They're always going to provide healthy revenue, because despite Amazon not beating earnings, or Amazon's not doing good because people aren't spending their excess money, Colgate's still going to do well because people are still buying toothpaste. I mean, I hope. So one thing I wanted to note here is that we have this huge strong pressure that's pushing up with our TLT, which is a good sign here. So TLT had that pullback. Similarly, we have our XLP having that pullback. So we want to see if we start creating that bear flag here, holding over the 8150 and on a continued upside here. And then similarly, we can be looking at our XLV here, our healthcare sector. That's another thing that tends to do well when the markets aren't doing well. And, you know, I mean, it's sort of self-explanatory, but everyone needs a doctor, right? And we need doctors and surgeons. I mean, I hope we do. So medicine is important, right? For it's needed for our survival. So anytime the market starts doing bad, these stocks tend to do well. So week after week, I would say for the last like 12 weeks, we were just looking at this for just a huge selling pressure that was building up for the longest. Now we have that break above here on our healthcare sector. Our 50% retracement here is our 158 level. We had a slight rejection there, and we're building strength above. So I want to see here if we start holding above here on a pullback off of our 58 level here, 148 level here, and continued upside, and we holding over this 50. That just gives you more confidence that the sentiment of the market is more risk off. Risk off is less influenced by tech. That just means people are not willing to risk their assets on volatile markets. So that's kind of how I tie everything in, as well as our our real estate sector here. Nothing too crazy to mention here. We did have this bear flag that we finally broke out of here, so it did not complete. So we did have our push over our 50 here, holding a buying channel for quite some time now. We did have the flush underneath, testing that 50. So now I want to see if we hold it. That's going to go in tandem with our XLF on the pullback here, right? We do see the pullback as well. I want to see us start to hold here. So news this week is going to be important. It's going to give us that indicator. As far as that, if you look at our sectors here, we have our financial, our tech, our energy, consumer, discretionary, staples, health sector, and the real estate sector. These are just the major ones that I look at. And if you look here, we do have a mixed bag, right? We have some greens, we have some reds. If you want to see the market go down, all of these need to go red. They all need to give me signs that the market wants to have that nasty pullback, right? Notice how on QQQ and SPY, I mentioned with both of them, they're at this area where we're starting to fail that trend. But there's still an area to have a little bit of a relief bounce. So now we want to see if that relief starts to have continuation, or do we have a failure off once we have the relief, right? Or do we continue selling? So it's going to be important to see how this week plays out, especially with all of our inflation news that's coming out this week. And then the last few things before I let you guys go is our a few of our mega caps. Nvidia, nothing too crazy to say. One thing I did mention for some time, we didn't unfortunately get that this week, but I basically told you guys last week, cut and dry, bullish over 130, 127, bearish under 127. Obviously we didn't get to 127, so I was still bearish on it. Now we have our bear flag once again having to play out here. So I do want to see if we start having, we might not even get this push all the way up here. We may not even get this push all the way up. What I'm looking for, can you work? Oh, I guess my drawing tool stopped working. So one thing I want to be looking for is our push up and reject over 116. So now that's going to be the major thing here. That's going to be our major pivot this week. That's the only thing I'm looking at. Bullish over 116, bearish under 116, and just prepare your levels in between. I don't have too many levels here, so I would suggest do a little bit of due diligence as far as levels. Also be mindful, Mullen does post out the mega cap levels every morning, so you can also utilize there, especially if you start seeing price action reject around 116 or closing over. You can at least feel more comfortable to say that Smoove said it, and then as well as MHM also has these levels. I feel more comfortable going long or short. So that's pretty much all I have to say right there. It's not doing anything well here. We do have our going back to our semiconductor SMH ETF here. I mentioned last week I wanted to see us reject around the 245 level. Um, on a breakdown, support around the 230 and have a rejection at the 245. Obviously, we didn't get there. We're continuing to hold a strong selling continuation here. So now what I'm looking out for is to see we might have a break out of this, right? So we're at the we're testing it right now. I do want to see us have a little bit of a push up and reject off of the 232.31 level. A rejection here. This was a support. This is kind of where prices was holding up. This is our last overhead supply, right? So now we're underneath the upper bounds of our range. So I want to see us have a rejection here. A rejection here at the 232.30 level would give me much more confidence to say that Nvidia is going to have that pull down. We're going to feel more comfortable with flushing. I'm going to feel more comfortable looking at levels below here. Start looking at 194. Start looking at these levels straight down. I want to see SMH have those rejections here. This is our semiconductor ETF. This is very major, especially if you're trading Nvidia. I mentioned it several times here where we had earlier in February where I said if we break over the 250, we would test new highs on Nvidia. That's the case. Every time that we break above, it starts to create new highs. And failures on the 245 is going to give us that push, our struggle down, right? So now our last line of defense is 232.31. So I do want to see us have a little bit of push here, reject. Then we'll start seeing further downside on Nvidia. For now, just looking at 116 above and below for Tesla. Nothing here too crazy as well. Again, we're looking at a little bit of a bear flag playing out here. The major thing with Tesla here is last week we were looking at our 5 SMA right here was at 300, and we were sitting in between it. And I mentioned last week that if we start breaking above the 500 or above 300 or a 5 SMA, I would feel a little bit more for a short scalp on the upside. But continued rejection at the 300 level or our 5 SMA, and then continued failures at our 200 would give me more confidence on the short. And that's the case. We did have that continuous selling pressure still continue to hold, and we did have that rejection and flush underneath our range. Our two confirmations did take place this week. So as far as any pathing, I would really just look to see our EMAs here. I want to see us test this 200 again. So we do have a push up. We may test the 200. We may test the two right around here, that 290 area, 300, just in between this little gap area between our flushes down. Look for some rejections around there. But for now, it's sort of a bear flag playing out here, so we can have upwards momentum even all the way up to the 326 level before we start flushing. So just be on the lookout for that. And even if we get the 326, it still is holding a bear flag. So just bear that in mind, because I know a lot of people will start seeing us go up nearly $70 on Tesla and say that it's going to go up and if there's upside. That's not the case. We're still holding the bear flag. So until we start breaking above strongly out of this range, I wouldn't rush to say that we are recovering just yet. But we do have very strong range here at our 264.80 level. Here we had huge resistance that we had pushed straight above out of. So if I do want to see a flush here, we do have a little bit of I don't have my drawing tool, I forgot. So we do have a little bit of a cup and handle here. So that kind of corresponds with our bear flag here. So if we do have our cup here that finally fails, we'll have that huge flush underneath, especially underneath our 200. So I do want to see us, one, not only maintain this channel. So either if we have some upside out of it, it would invalidate it. But we do want to see us, even if we still hold in here, it could go up quite a bit if you notice, right? can go up a little bit. But we really want to start seeing the failures at that 264.80 level here. Then we'll feel more comfortable, and it's going to have some nice flushes on the downside if that is the case. So that's one thing I'm looking at for now. As far as any pathing, that's the only thing I can say right now. Just look for some, just scalp the upside and scalp the downside. As far as Apple, um, there's nothing too much to say as well. Here we do have this buying channel that I mentioned last week. It's still holding up. So even if we have any pushes up, it's still flushing down. It's just been chopping in this range here for quite some time. So obviously, if we start pushing out of it, I would feel more comfortable of us having further downside. So I'll leave it here for a moment so you guys can maybe take a look at it, take a picture, redo it yourself, however you guys want to do it. But that's one thing I'm going to be looking for. And last week I mentioned two levels on. I mentioned two levels here, the 246 and our 234.15. Similar goes, same situation, bullish over it, bearish underneath it. The bearish sentiment would give you a little bit more of better price action, as you see here, where we had a move nearly $4. So I feel more comfortable with the short on the way down, but it doesn't necessarily mean that I'm not bullish overall, especially since we're holding this buying channel. So I would be looking out for that 246 and the 234.15 level for any shorts and longs. I know it's a big range, but in between, you can always scalp in between. But for our major long-term move, those are the two things that I'll be watching out for. And I think that about wraps it up. And then once again, if you guys weren't here for our last live, I mentioned our VIX here. You do want to be very careful when price is above the 20. Our VIX is a volatility index for our S&P. And basically, it helps us judge whether how large these candles are going to be moving, right? So if you look for the last few weeks now, or I would say last couple of trading days, we have huge, large body candles, right? Some candles are even $1, $2 moves. And in that case, you want to start seeing price action break underneath the 20. So over the 20 is what's giving us those large body candles, right? Where you're getting stopped out quickly and then it continues going your way. It's very volatile, very unsafe. So I would recommend always sizing in lower, especially when it's above 20. And if it's above 30, if you do not have at least a year or two under your belt, I would recommend not touching the market at all. I don't care how long I'm be trading, I am not trading over the 30. So there's just two things you always want to be looking out for is comfortable price action underneath the 20, because then you can actually look at patterns in your EMAs and whatever you look for in your strategy. It'll be much cleaner. Anything over 20 will have some exaggerated moves, which is going to be a little bit harder to trade. So yeah, just wanted to point that out, and that about wraps it up. Any other questions before I go ahead? I'm going to go ahead and end the recording, and then you guys could go ahead and ask any questions you guys want.